Thanks everyone for joining us. Let's do Cornish metals first. And
Brilliant.
then if we've got time, we could do a quick look at the markets, I guess.
Great. Okay.
So you were saying, Keith, about the pumping.
Well, actually, why don't we, you just go through it and we'll have questions at the end.
Okay, fine.
Because otherwise I'll be jumping in halfway through the presentation and
So here we go with Cornish metals.
Great.
As it loads up. Okay, so everyone can see that all right?
Yep.
So Cornish metals. So Cornish metals are a exploration company, and they're focused on the South Crofty project in Cornwall. Now they listed on AIM in 2021, raising 8.2 million. And then in 2022, they raised 40.5 million to develop that project, which is basically, it's an existing mine that's flooded, and that money is to build a water treatment plant, and then they're going to drain the mine, and they're going to do feasibility studies and everything up to the final investment decision. And it has indicated reserves of 44,000 tons of tin and inferred of 37,000 tons.
Right.
And the grade is about 1.5%, which is actually quite a good grade. Now, it's very interesting because this mine actually began in the 1800s. I mean, here's the actual one of the original buildings where the site is, and it actually was a running mine all the way until 1996. And I've got here the history of all the mining at the site, and actually what gives me some hope above your typical exploration play is, as you can see, right up until when they stopped mining, they were actually at peak production. And then the mine closed then because of the drop in the tin price.
Right.
Now, interestingly, about the fact they've got to drain the mine, that was, and actually, I've got a nice
I saw
image
that.
here of how they're going to do it. So this, for me, I was thinking, is that a bit of a risk of, are they, it's raining worse than ever. Are they actually going to be able to drain the mine? But what I found interesting was in the late 1800s, the mine closed then as well and flooded, and they were able to drain it and reopen it in the early 1900s. So that gave me a little bit more confidence in the draining the mine idea, because if you can drain a mine using traction engines, presumably should be able to do it now.
Yeah. So, well, going back to the chart you've just shown, what's the scale? Is that, I was slightly confused about what it's got levels. What's the level? I mean, how deep is 400 level?
Okay, I may have that. So I can't tell you how deep the mine is without doing a search, but it's deep.
Right.
Probably one of the deepest in the country. So I did see that information elsewhere, but I'd have to go digging. But it's kilometers deep.
Right.
It's except very, very deep. So the actual drills, let's have a look.
Okay, it's saying it's so I've just looked it up on Wikipedia. And it says it's 910 meters deep. So the best part of a kilometer. That is deep.
Yeah, and I've heard that I was listening to a podcast actually on tin mining, and they were saying that the miners used to go around, the Cornish miners used to basically go around in just their underpants
Mm,
whilst working in the mines because it was so hot down there.
yeah.
It was like being in a sauna. So yeah, so it closed in 1996, and then the local council had all these ideas of turning the whole area into, actually most of the mine site has now become the town of I believe Poole,
Right.
um, or maybe South Crofty it's called. But this, a lot of this urban area here is actually built on what was the original. It used to be a vast
Right.
Victorian-esque
Yeah.
industrial wasteland, basically with loads of industrial buildings, and a lot of it has been converted into basically a town now.
Yeah.
And but the local council wanted to turn the rest of the mine area into yuppie flats and a leisure centre.
Mm.
And the owners, there were several owners. It changed hands. The mining rights changed hands, and eventually it was a company called Celeste Copper, and they basically ultimately managed to take the council to court and win the right to retain the mining rights. But
Mhm.
the delays caused by the council led to them going bankrupt. And then in came Strongbow Exploration, who bought the site and the mining rights out of administration, so they got quite a good price for it. Um, and then they changed their name to Cornish Metals, and then listed on AIM, raising 8.2 million. And I've done the market cap of Cornish Metals at the moment is 33 million Canadian dollars, and the a study that was done in 2017 values them at 177. Let me just close that. 177 million dollars Canadian, and I took a calculation of all that tin, and
Yeah.
10% of that would be, as a real kind of rough yardstick, 220 million, 220 million Canadian dollars. So, which is just kind of a rough thing to show that this is not completely unrealistic. So,
Mm.
so there is some good upside there, and actually a lot of a lot of speculative plays I've looked at seem to have um, a 5-to-1 kind of upside, it seems, um,
Mm.
and that's the case here. Uh, Now they also have they've done some exploration drills nearby, at this Carnbria South area and United Downs area, and they've got some interesting results there. And also they have, from when they were Strongbow, they have some North American rights, but to be honest, I think they're not really, don't really amount to much. Now, as part of this deal, when back in the 90s, when the Cornish mining industry was dead practically, as well as buying the rights to South Crofty, they also got lots of mineral rights um, throughout Cornwall. So you see, they've got all these mineral rights throughout Cornwall. So this is kind of interesting because it means that, as well as having this high risk, high reward play with South Crofty, if that was successful, there's then follow on opportunities where, it could be, they could become a kind of premier oil kind of thing, where
Mm.
they end up turning into a proper company through having rights to all this other um, mineral rights everywhere across Cornwall. And they've also got an interesting deal with Cornish, with a company called Cornish Lithium, which I'll go into. Now, the first thing is the tin price is very important, and
Yeah.
the 2017 net present value estimate was done at a 22,000 price, which is actually where it is now. And in the in the long run, it kind of looks like it's trending up, but we're in a kind of a bit of a roller coaster at the moment, even though we are currently at that level. And when I close in, it's kind of, it's just about all right, but I wonder, is it worth keeping an eye on the tin price for a
Mm.
bit before going in? What's your thoughts, anyone, Keith, and anyone else, on the tin price?
Um, well, I mean, over the course of the last year, it's done incredibly well because of this change in the composition of solder. So they've mandated you're not allowed to have lead in solder anymore. So well, it used to be, I think, 80% tin. It's now like 100% tin. So I think the downturn in the tin price is probably related to um, reduction in semiconductor production because of the global slowdown. And I would have thought, if and when there's a recovery in the world economy, that tin prices will head back up
Yeah,
because it's a you look at it in the periodic table, it's quite a rare element actually. And I'd be pretty bullish on tin, I think.
yeah. So I looked. Yeah, I mean, it's kind of, if there is this recession, you know, maybe that would hurt, but that's like a big risk. Actually, I did go into the tin a bit, which I'll do now. Actually, um, so like you say, tin is sold as 50% of tin consumption.
Mm.
This is kind of, I've put the references here. They're kind of wonky 2020 data, but probably roughly good enough. But yeah, solders 50%, chemicals 16%. So, oh yeah, there's a lot of talk about lithium, of EV stuff, and renewables needing tin as well, as a potential
Mm.
growth, but not so at the moment. But yeah, it doesn't seem a particularly dangerous commodity, risky commodity. And
Actually,
then,
sorry, Ro, could I just interrupt you actually because I wanted to check on this. So solder was traditionally 60% lead, sorry, 60% tin, 40% lead, or perhaps 63% tin, 37% lead. But the EU have put into effect restriction of hazardous substances directive, in which you're not allowed to have lead in solders. So it's now mainly tin, but there's also bits of silver, nickel, and antimony in there. So yeah, that's what's driving the tin price up.
and the it's mostly produced by China. Half of it's produced by China and Russia. So that will be kind of good, because if they're sanctioned, um, and then I think, yeah. So it's actually then produced quite a lot. And I went into the International Tin Association report, where they say that the actual reserves have been dropping over the last decade.
Yeah.
But there's enough reserves for 18 years and resources for 50 years. So they consider the tin supply to be relatively stable in the long term, and the price to stabilise as production from new mines catches up with prices. And they say there's a small chance that you could get like a huge regional discovery that could cause a supply glut. But otherwise, from reading the International Tin Association report, um, yeah, I imagine that makes for quite a fun Christmas dinner, the International Tin Association. Um, but yeah, from reading their report, um, it seems reasonably stable, and they had a list of the top mines in the world, top 15 undeveloped mines, and when we look
Wow.
at the tin content, we see that actually 1%'s a good
Yeah, yeah.
content. And actually, also here, there's another project called New Age Exploration in the UK, which is in, I believe, in Cornwall as well, um, which has 1%. But yeah, but generally, about amongst the 1% is actually 1.5% is actually a good grade. So okay, so to look at their assets then, and South Crofty is the original mine site. It's fully permitted. And they've actually got the goddamn mine already in the ground with several proper shafts that they believe they can use. So they don't have to do any of the initial tunneling like is typically the case with a prospective exploration play. All they've got to do is dewater, which they're planning to do by April of next year. They've actually just started. They've built the water treatment plant and they've started pumping in October. So then all they've got to do is dewater it, do the feasibility study, and then by year end of 2024, they need to raise what I guess is something like 120 million. I've done that because I dug out an old
Mm.
Strongbow presentation, and from there I've kind of calculated that it would take roughly 140 million, or 120 million question mark,
Mm.
plus get the final investment decision. So you've actually got ground. If you go into this one, you should get ground zero, i.e., you know whether you're doing okay or you've lost all your
Mm.
money relatively quick, within a year.
Actually, sorry, Rogue, I don't think that's true. Because I mean, the thing is, I'm very influenced by what happened with Rambler. In that, you can have a perfectly viable project, but what scuppered Rambler is the production costs. And actually, I go through, going through your presentation. The one thing that there seems to be missing to me is an estimate of what the production costs are going to be. Because I mean, you can go through and see, they've got a big resource, and you can show it's there, and how much it's going to cost to drain the mine and get the water out, so you can actually get to it. But you know, what matters is how much it's going to cost per ton to get the tin out, and I can't see an estimate.
Yeah, you're right. There's actually I mean, obviously they've got this feasibility study, but uh, when in 2017 they got a net present value result, so they did do that calculation there.
Right.
And we do have a life of mine sustaining capex of 66
Yeah.
million. Um,
So it's the cash cost, isn't it? That's what they're
an average
saying.
cash cost, average LOM, all in sustaining cash cost.
Yeah. So is that your calculation? $10,000 a ton.
Yes.
Okay, so I don't know when the there's 2017 production presentation. Now we know prices have gone up 20% in the last 3 years,
So
and so
the price now, so for their base case,
yeah,
that was $22,000 a ton.
which is where it is now. But what I'm
Yeah.
saying is that the production costs are no longer going to be $10,000 a ton just because of inflation so far. So over the last 6 years, they're
Yeah.
probably going to be in the order of $13,000 a ton. Still profitable. But what happened with Rambler is they're just way too optimistic because there's such an optimism bias to try and get
Mm.
these projects off the ground.
Yeah, and that it's good that you caution me there because I've kind of been thinking, jumping to my conclusions. Sorry, everyone, but my kind of main conclusion is it would, at the end of this, is it would have to be $20,000 tin price to be a go. And
Yeah.
I was kind of thinking, am I being a bit, am I going to miss out on opportunity here? Am I being a bit too conservative there? But then from what you're saying, um, if 2017 had a $10,000 floor
Mm.
price, then if you want to add for inflation and then add a nice comfort zone, actually 20,000 probably is a good
Yeah, I completely agree.
minimum price.
'Cause the
Mm,
thing is, when you talk about what's the upsides and the risk reward profile of investing in this project. I mean, it's going to cost what, say, 200 million to get the $200 million to get the mine up and running. Is that roughly right, Rove?
yeah, it's
How much?
costing so
Yeah.
pre-production capex of 94 million, and
Okay.
then 66 million sustaining
Yeah.
capex, and that 94 million includes the dewatering station and the pumping of the
Yeah.
mine. So
Because the thing is,
that's how I got my
yeah,
177 there.
yeah. Because the thing is, where I see it is, it's going to take 3 years to drain the mine, and then it's going to take, you're going to have to raise 100 million sterling to get the mine into operation, and all that financing is also going to have to be paid back, and interest rates are quite high currently. And I just really wonder what the actual margin is going to be. So if let's say it's $22,000 a ton currently, and it says 10k there, margin of error, I'd say 15. Let's say 15. So you're making $5,000 a ton. Do we have an estimated production target?
Yes, it's a 8-year mine life.
Yeah. How much are they
Payback is
producing a year?
3.8 years, and
But I mean, how much are they producing a year?
okay, so it's 8 years now. Now, actually, they've increased the estimates since then, but
Okay.
um, it was estimated roughly 4 million tons. So
Yeah, no,
four
that's the resource. But how much are they going to actually produce each year? Do you reckon in tons of copper
of tin,
of tin?
65,000 tons. 65,000
No,
tons of tin. Um,
that's their in
that's
total.
the 2021 estimate, and then
Yeah, but
divide
that's
that
the
by eight
total resource.
years is
Okay,
8,000 tons a year, which
eight
is
thousand tons a year.
which is
Okay,
162 million pounds worth. Is my maths right?
Hang on. So that produce 8,000 tons a year, but we calculate at 22. Let's
So
say at
65,000 tons of tin
yeah
divided by 8 years is
yeah
8,000. Let's say 8,000 tons a year
yeah.
times 20,000.
Mm. Okay, no,
Oh
this
no, that's
actually.
160,000.
Sorry, let me just quickly go through my maths. Okay,
Yeah,
so we're saying that they're going to make around a margin of about $7,000 a ton, based on $22,000 selling price, $15,000 a ton production costs, and that's they're saying 10, we're saying 15, just to kind of give a margin of error. Yeah, so they're making $7,000 a ton, and you're saying they'll produce around 8,000 tons a year. That's a lot. 8,000 tons of tin. That's a lot of tin. So then they would make profits of about 56 million US dollars a year. And if we say they're funding, they require 200 million funding. So they're making actually the best part of, over 28% a year. That's good actually. If they could do that, if they could produce 8,000 tons a year at $15,000 a ton, actually, this is a good project.
yeah. I mean, it was. You can see when it was stopped, it was
Yeah,
producing 2,000 tons a year,
yeah,
and we just said, okay, so let's assume that they're only going to be able to make 2,000 tons a year, and then the mine life will be longer than 8 years.
yeah.
So let's assume 2,000.
Yeah.
That
But
will
at that point, it's just not worth doing. Not 200 million. Just doesn't wash your face.
so two. Yeah, so that
Because
would be
you'd be
40 million a year.
no, that would be, we'd say 14. One four. Yeah. Okay.
Four
Profit
zero,
would be
four
about.
zero, 40 million a year
Okay.
if they achieve
That,
the where they left off in the 90s.
yeah, but that would be, it would be 40 million of revenue. I reckon they'd be making something like 14 million of profit, and it's cost you 200 million to set up the mine. It's just not worth bothering, frankly.
Yeah, but so they must think. Yeah, I mean, when I looked at this, they said 8 years mine life and
Yeah.
reserves of assuming, they don't say it here, but I've assumed um, so I've assumed here we go. So I've assumed this number here,
Mm.
but actually the estimate was before then. So
There's
yeah,
just too much uncertainty here. They're not. I've yet to see anywhere where they say how much they can produce per annum.
correct. There's definitely not been. I can't remember them saying how much per annum. Are there anyone in the chat who's following Cornish metals? By the way, anyone know that?
To me, this just looks really, really speculative, and I think you need, frankly, a lot more information before you could possibly even think of investing. This is just pure speculation at this point. So its current market cap is 56 million.
Yeah, but like I say, they say they're estimating now, you know, a substantial amounts of resources there. I mean, the MPV estimate was 177 million
Mm.
from, like,
Okay, so
so
actually,
even this 2021 number here is 65,000 tons of tin.
Yeah.
So that's
There's actually an RNS out today
oh,
from them. I don't.
which I missed.
Okay, but so what they're saying is dewatering has been underway since early November, with up to 25,000 cubic meters a day of water being pumped out directly and treated at the water treatment plant. That is an enormous amount of water. The
Yes.
water, the water level stood at approximately 155 meters below the surface as of December the 5th. They've got a long way to go if they're going to get down to 910. The company maintains guidance of 18 months from start of dewatering to complete dewatering of the South Crofty mine. So the trouble is, Rogue, that my prejudice after having been involved in Rambler is that everyone just gets far too excited before the production comes into being. In that, as long as it's not producing, nobody knows whether it's going to be profitable or not. So everyone hopes it's going to be profitable, and the share price basically is just a reflection of that hope and optimism. And I think it always takes longer and more money than people expect to get a mine into operation. And so I would wait until there's a lot more certainty or an information available
Okay. So
before I dip my toe.
right. Okay. I've said basically I've just done a quick calculation, and it actually comes to 1.3 billion, the value of that tin.
Yeah.
So 65,000 tons times $20,000 a ton is $1.3 billion.
Yeah.
So $1.3 billion is the total. So it's interesting though then to also think of this is before when it closed, it was only
Mm,
producing 2,000 tons,
yeah.
which so that's only 40 million.
Because
Mm,
naively, okay, this mine has been in operation since like the 1890s,
yes.
and all the high grade, easy accessible tin will have been exploited. Yeah. So to get to the seams, you're going to have to go a long way underground. That's why they're already, it already goes 991 meters. So if they were producing 2,000 tons, 2,500 tons a year, actually 2,250 roughly, back in 1996, and it had been growing, but I just really think it's going to be difficult to get much more than that. I'd really like to see their plans for doing so. I mean, technology, you're talking about technology 25 years ago. I mean, most, I don't think there have been that many huge breakthroughs in underground mining technology. I mean, modern mines are cheaper because they're huge open pit mines, which you absolutely can't do in Cornwall. So I would really like to see a production estimate from them, frankly.
Yeah, so they do have they have got 3D schematics and things of where the grades are, and they've done drills to map it out, and
Yeah.
they seem to say that they've got, well, over £1 billion worth of tin that's accessible according to their estimates. So there's a comment there from Magnets that according to Cornish Metals, production could begin some 48 months from now. once operational, they expect the mine to produce some 4,500 tons of tin annually.
Right. Okay.
So 4,500 tons
Yeah.
is
Yeah. So it's
90
double.
million. Wow, that's 90 million.
Yeah. But it all depends on what the cost is. You know, if it's costing you 96 million a year to
Yeah,
get that out, then it doesn't work.
but
And
still,
that's what Rambler.
well, I think you're being a little bit harsh or doubtful. I mean, the thing is, these are big numbers. There's
Yeah.
certainly there claims that there's a lot of tin there remaining, with subsequent studies. And when I look at the profile, this isn't like a mine that's they're scraping the barrel. You know, this is a kind of profile of a mine where they're still digging into the good stuff.
So, Ro, can I share my screen for a
Of
second?
course.
Let me see if I can do this. Hang on. There's because I've got up their presentation. Can you see that, everyone? Okay. So that is from their latest presentation, and that is a cross section of South Crofty. And you'll see that the tin is really deep. So you're
Yes.
talking, you know, from 500 meters to a kilometer down. Yeah. And so hence they're having to, you know, drain all the way to the bottom to get at the tin. The copper is towards the top.
So
So
the copper's been exploited already.
yeah.
And if you go back up to that previous slide, the top bit there, originally it was a copper mine.
Mm.
Then the copper ran out, and then they went deeper to exploit the tin. And actually, you see the Great Cross Course there.
Yes, got it.
That's a kind of natural fault, and I think these arrows are actually where there may be going to be
Exploration opportunity.
exploration,
Yeah.
but apparently one side of that was where they were mining, and then when
Mm.
they got to the barrier, they couldn't mine anymore.
Right.
But there's basically loads of good stuff the other side. So there's a whole repeat of what's already gone on in one side, that formation
Mm.
on the other side.
Right. Okay. So this is a view from above. So exploration target area is the dashed blue area. And so, God, they've had loads of historic mine shafts. All these yellow dots, old ones.
Yes.
And the grey area is the actual mine site.
And this whole town here, it used to be a massive kind of Victorian-esque, um, industrial
Yeah.
landscape,
Mm.
and it's now been a town there.
Okay. Well, let me to quit sharing, and you can take it back, Rogue.
Okay,
Because the
so
thing I'd say, you know, that's I don't know. I don't know what the other tin mines are like, but this is clearly, you know, it's deep and it's in the UK with very high environmental standards and high labour costs. So I don't think it's going to be cheap.
well, okay. Let me count. You've made your point. that you
Yeah.
that you think it's probably not going to be economically viable.
Well, it's not that. It's not, no, actually, that's not my point, Rogue. It could well be economically viable. The question is it a good investment?
Well,
And
if you believe the MPV number, it currently
mm,
might be a good investment. But there are some caveats along the way. So anyway, so we've discussed this South Crofty, the main mine, and
yeah,
really, when you're investing in them, it's all about, is this going to happen or not?
mm,
They had also the United Downs. They did some drilling, but it wasn't all that impressive comparatively. Um, Now, I did this in a very crude way, which I'm just going to load up now. If I get my Cornish data here. So, okay, so what I did is here's the drill data for their exploration of South Crofty, where they have thickness and percentage grade. So you see the color there gives you a kind of rough idea. Well, the United Downs, this is just a tin, and
mm,
yeah, it's not so impressive. Now, this obviously, I'm not like I'm no geologist, but what I do is when you get this drill data, I plot it like this
yeah,
with a multiple of assay against thickness, and then
yeah,
as a total amateur, I can at least visually compare it with what I know is a good
mm,
one. And for me, it doesn't look that impressive at United Downs. Now, the thing is, though, at United Downs, they did find copper, zinc, and silver,
mhm,
but I'm not so excited about United Downs. However, in the Carnbria South, it actually looks not super amazing, but comparable uh,
mm,
with,
yeah, yeah,
roughly 1% grades. Um, and this is this what they've called the wide formation. And what happened was they were actually testing the Great Flat Lode,
yeah,
but one of the drills went extra deep and discovered this wide formation. And so they're
mhm,
currently doing a drilling plan where they're going to do loads more drills targeting the wide formation.
mm,
So there is some excitement that here you see the wide formation
yeah,
was, a
one
decent
percent,
thickness of
yeah,
1%. So that could be it could it could show maybe not as good as South Crofty, but not far worse. And
mm,
what's good about that is it means that they'll be able to use the same mining processing plant
mm,
to process that stuff, and they're actually going to use the existing mine works and continue to mine into Cambria South to exploit. They can actually access this
right,
formation from the
okay,
existing mine network. So,
yeah,
so it's good because it gives a bit of life extension and a bit more substance to the proposal. Um, okay, so then the Cornish, so they have rights to all these
mm,
territories across Cornwall, which is quite a good thing, quite a
yeah, yeah,
bonus, which they kind of picked off, because normally you're having, as if you're a young explorer, you're having to pay to play, but they've actually,
mm,
because they got it all for a song when they bought from this project from. This all came along with the bundle when they took South
Mm.
Crofty out of administration. It is actually good that they have these mineral rights all over Cornwall, um, and they've got a very interesting deal with Cornish Lithium. So Cornish Lithium are a company that do geothermal, and at the same time they plan to extract lithium. Um, Now, I actually took a look at their annual report, and it looked like a nightmare to me. And I'm very skeptical really about geothermal. However, um, they only recently got a massive funding, including lots of government taxpayer money, and there seems to be loads of enthusiasm for them. So they probably, so there's potential for them to, uh, be able to spend lots of money over the next decade. And they've got a deal with Cornish Metals have struck a deal with Cornish Lithium, where Cornish Lithium get access to all of Cornish Metals mineral rights areas to do exploration for geothermal projects. And in return, Cornish Metals will get 25% of the first project developed, plus 10% on all subsequent projects. That's a
Mm.
match and invest in or dilute, but option there. But they get those percentages, and they also get a 2% royalty in all the money that Cornish Lithium make. And then on top of that, Cornish Metals get given shares, 100,000 a year's worth at the moment, and 500,000 a year's worth from 2027. So they've, I think they've got a deal that's maybe slightly onerous for Cornish Lithium, but quite a nice deal for Cornish Metals, which adds a bit of spice, and it kind
Mm.
of gives you access to the lithium story, which is kind of something that's fun. It's like a fun bonus, I guess. I'd look at it without wanting to invest directly in Cornish Lithium. It's kind of quite a fun exposure to all that.
Mm.
So,
'Cause I looked at, we did a piece in the weekly probably last year about geothermal. And the bottom line was these drills. I know because I'm looking at the Cornish Lithium website now, and they've drilled two 1 kilometer deep wells at United Downs. And we in the weekly we were talking about the Eden project, where they had drilled these geothermal wells to provide energy for the Eden project, but those were immensely expensive. I forget from the top of my head, I think there was something like it cost £12 million to drill the two wells. And they were producing really very little energy, much less than a single wind turbine.
mm,
So I think if basically you came to the conclusion it only works with government funding. And
yes,
if they've got if they're so if people are drilling geothermal wells with government funding, and they can extract the lithium from those existing, funded wells. That works. That's great, but not if they're drilling them themselves. Sorry, Luke.
yeah, I agree. And like I said, though, I would invest in them myself, but
Mm.
it's a very, they've got a nice interest in them.
Yeah.
If they do, if they're lucky and it does become a massive thing, or if the government, if millions and millions of government money gets poured in, you can
Mm.
access some of that as well through Cornish metals.
Yeah.
It's very interesting, and they actually gain a substantial shareholding as well as part of this deal. It's amazing. It's like it really is. They really get their pound of flesh from them
Yeah.
with that deal. And actually, that deal was inspired by a horrendous deal that they themselves were subject to, which I'll go into in a bit. So Strongbow exploration. I looked at the history of Strongbow exploration, and they started out as a Canadian stock. And this is your typical exploration, raise some money, lose it all,
Yeah.
occasional discovery here that just keeps them alive, or maybe these were secondary fundraisers just to keep themselves alive. But it's a very dire price history, and they've actually been around since the 90s. So it's worth to take note of that, because Strongbow, Cornish metals as they are now, they've got a long history of hanging on to life by a thread. And all these previous projects obviously amounted to nothing, and they just managed to get the cash together to buy the South Crofty site and reinvent themselves. But this is a good warning that you've got to factor in before
Yeah.
you invest in Cornish metals. So the price history, but perhaps before, I'll just have a look at those. You've posted there the Eden project, and I did
Yeah.
see everyone. They're so proud of it, aren't they?
Well, it just costs an absolutely vast amount of money. £24 million.
Yeah. Well, at least it
And
was EU money.
well,
So,
exactly.
I mean, that in itself is a great testament to why it's not good to be in the EU, in the European Union. I think if that's how the money is
Yeah.
dished away. But yeah, so I mean that's great. Everyone's given themselves a real slap on the back. But I
Well, I
do, to
try.
be fair, I wonder what their heating. I bet the heating bill was quite high, so maybe it will pay itself off.
Yeah.
Have you ever been to the Eden project?
I haven't actually.
It's
Getting down to
great.
Cornwall takes forever. Really?
Yeah, it does take forever, but it's a great place. But they've got massive domes, huge biodomes,
Yeah.
So I imagine their heating bill is expensive.
Yeah.
So, maybe in 50 years' time or something, that could pay off, or 100
Mm.
years. I wonder, I'll go and check that out after this call, actually, how much their
Yeah.
heating bill is every year. And then I can work
Mm.
out how long before that 24 million gets paid back. So, okay, so here's the price history for uh, Cornish metals, and they listed on AIM. Um, and actually, in the when they so actually no. So what I'll do is I'll go through the numbers, because I
Yeah.
found a few interesting tidbits which then this picks up on. So okay, so right. So they're your typical. You've got your typical exploration play. They've not made any money really,
Mm.
but there are little interesting little incomes which tell you a little bit about them. Um, so they have these unrealized and realized gains or marketable securities. So during their past life as a kind of cat in hell. I don't know how to put it.
Mm,
As their past life as a really struggling exploration company, they actually
mm,
did all kinds of wheeling and dealing,
mm,
and as part of that, they picked up substantial stock in some companies, and then one of them was West Haven Gold. I wondered if you could be kind enough, because my internet's I'm scared of crashing my stream if I do a web search.
yeah.
Could you possibly check out West Haven Gold share price, um, historical? Because they bought this. Um, they somehow got hold of lots of stock of West Haven Gold, and in 2009 made a 2 million gain because they made a gold discovery. And then thanks very much. So here you see it's a classic. So this is the classic exploration stock. So this is what we
Yeah.
want to happen for Cornish metals. So they
Yeah.
made a gold discovery, and actually Cornish metals. It's almost as if they knew what was going to happen because they're an exploration company. They then sold here right at the top, and then since then you can see what's happened.
Very good. Very good.
So that's this 2 million here. And then here was they have quite a lot of shares in Cornish Lithium. And Cornish Lithium were basically, if you look at their financials, they're basically going to go bankrupt every year, practically. They've got horrendous cash burn. They employ loads of people. They spend a lot of millions every year. But anyway, but they actually got a massive cash raise fund. They did a big fundraise, including, I believe, Cornish local government fund putting a few million. And so that explains this unrealized gain here.
Mhm.
So it's interesting that they have interests in and also royalty. So they have interests in um, other exploration companies, including Cornish Lithium and some other ones from back in the day when they were wheeling and dealing. Um, and then when we look at their expenditure, it's fairly reasonable, 2 mil a year, considering the work they've been doing. And actually, the directors don't get paid other than via consulting fees,
Mm.
auspiciously. Um,
Still quite a
and
lot.
and
750 grand.
they have the salaries here.
Mm.
Um, so, but you know, it's fairly in control. Um, but I dug into the salaries a bit more, and yeah, it's, you know, they're paying their top bods a good, you
Mm.
know, over 1 million a year. So, you know, the CEO's getting 500,000 a year, about, you know, and then there's substantial um, stock options, which I kind of don't like. Now, the stock, only about 2% of stock is given as options every year, apparently, but there's a lot of pigs in the trough.
Mm.
Um, but it's the way I feel is I can just about deal with this. I've seen worse, but like with it seems every exploration company, there are lots of pigs in the trough. It seems when you look at how much the executive management are being paid, when you consider it's still a rinky-tink company. You know, it's
Mm.
not really a mainstream company yet. There's a lot of high salaries here, I think. Um, so, but it's still kind of manageable.
Hmm.
And then so their cash burn is kind of okay. Now we had so back when they were Strongbow, and I keep thinking of the alcoholic beverage, but
Yeah,
back in these days when they were Strongbow, there was all this wheeling and dealing because they were basically at risk of going bankrupt, and you can see how they had barely, a couple of million, and then they raised money in 2018 to get some convertible notes off Cisco, um, and so they basically sold a load of convertible notes to Cisco and to raise 7 million. And basically, if it wasn't for that, now before then they were living off a 1.5 million interest-free loan from Cisco. So Cisco were one of their main benefactors, keeping them going. And 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 obviously they looked like they were kind of short of money. So Cisco raised 7 million, and this was the time when they then bought the South Crofty. So let's fact check that. So they bought the site from administration, sorry, in 2016. So okay, but they were kind of running out of money anyway, and in order to keep going, a Cisco had helped them out with 7 million, but they had to pay a price for that. And then you see, then they get this. Sorry, and then what's happened is in 2022, Cisco converted those convertible notes into royalties. So now they don't have to pay. They haven't got that debt anymore. You see, the debt's cleared, but they now have to pay a Cisco 1.5% royalties for everything they make in South Crofty, plus 0.5% for anything else they ever make in Cornwall. So for 7 million, I think Cisco got quite a good deal there, and that's something to factor in. It's a little bit of a sting, and it also tells you a bit about the kind of buccaneering history of Cornish metals when they used to be known as Strongbow, and
yeah.
and so now obviously I think without that investment though from Cisco, maybe they would have struggled to get where they are now, and they did manage to list on A in 2022, and then they also raised the substantial amount in the most recent fundraise. So now they've got loads of cash. And just something I'll point out, by the way, is these are financial years, and their financial year ends in end of January. So financial year 2023 is actually 2022. That's a little complication for you, but they're going to change that starting from this year end. So anyway, they've now, thanks to that fundraise, though, they do have lots of cash. And actually, um,
Mm.
when they did that fundraise, it was right in the midst of the post-COVID boom, when everyone was caught up. They were caught up partly in the renewables mania, and there's all this free and loose money everywhere, completely different to now. So what has really advantaged Cornish Metals is they were able to raise 40 million right at the top of the mania. And so they have actually got plenty of cash to build the water treatment plant, which they've done, pump the water out, and do the feasibility studies. I think they're very well covered because the timing was just perfect. Um, and So that's it, really. I think looking at their accounts, they are healthy up to the
Mhm.
next step. The only question is, will they get that fundraise and final investment decision at the end of 2024? Um, so,
Mm.
um, so one interesting thing is when they took on the South, when they bought, sorry, so when they bought out of administration the South Crofty project and all the Cornwall mineral wealth, um, the person they buy it off, they had a kind of a bit of a onerous contract with them, and which I'm okay. Here it is. So this was the initial contract, and they had to give a load of shares to the sellers. But then there's this horrible clause here, whereas when they got um, a project decision to go into production, they would
Mm.
actually have to pay the liquidators 25% of the net present value, um, you know, in shares, which obviously is a real poison pill, frankly.
Yeah.
And I don't think they could ever achieve a final investment decision with that horrible clause in the contract. And actually, after they listed in 2021,
Mm.
they signed a side letter with the original owners, getting them out of that. And
Yeah.
so now instead of that, they now only have to pay him 5 million in shares. And
Yeah.
I'm pretty sure that they said to him, "Look, we're just never. This is just never going to fly unless you make
Yeah.
it
Yeah.
real." And but the thing is, I don't think many. I wouldn't have thought your average Cornish metals investor on the forums knew even was much aware of that. But I think that is actually the
Mm.
most significant news story since they've been Cornish metals. Actually,
Yeah.
and anyway, so they were this big speculative bubble, and it's popped. And um, okay, they had the capital raise. But what's interesting is, ever since the spike here, we've only had good news. But in all that time, you've seen the speculative bubble pop, and it's almost the same as what always happens with these exploration kind of stocks. You get these ridiculous peaks, and then they fade away. But in that time, it has only been good news. They raised the 40 million. They got good
Yeah.
drill results at the. They made a discovery at the wide formation at Carnbrea, and they got good data from their South Crofty lower mine, and they've started to pumping at the mine. And the price now, for me, this is actually an attractive price profile because we've had this big speculative pump and it's settled down now. So for me, it's kind of looks like a good entry point if you were that kind of a risk taker. Um, so I look at their assets, and it's actually obviously lots of cash because they managed to raise the money at the perfect moment, and exploration assets, valuation assets. So obviously this is going to be reduced, and actually in some of it will be replaced by exploration and evaluation assets as they complete their work to get to the next point. So it's a very cheap price to book, but all the same. So I mean, actually, in its own right, it is actually looking very good. Of course, you've got to remember though that with this company, it's all about will they achieve that final investment decision. And with the again with this thing that I do, they look very cheap. And this is the net present value of the mine according to the 2017 estimate, and that's compared to the market cap, it looks favourable.
Yeah, but
Shareholders,
sorry, mate.
yes,
Sorry, mate, to come in here, because that's the market cap currently, but they're going to have to raise a load of money, aren't they, to get the mine into operation?
yes,
So, that's not going to be its market cap if they get the go ahead. Presumably, that'll be a mixture of debt and shares.
yes. Now, thank you, because that's actually a question I wanted to ask, because that was something I wasn't so sure about. I mean, I plot how many, as you can see, as they've done the capital raise, the AIM listing, and then the capital raise, plus all the giveaways they have to give to the owners, the original owners, as part of the deal that I went into.
Yeah.
There's a lot of stock dilution, and a question I had kind of for you, which you've just raised, is okay, when they get to, they've got to raise 100 million.
Mm. Yeah.
So let's say the share price, well, yeah, how do you factor that in when I'm doing this kind of analysis here? What do I think about in terms of how stock dilution? So if so it's a 5-1. It's in our favour now.
Yeah.
If they do a capital raise at, their share price is 10p now, isn't it? So if they raise, let's say the stock price went up to 50p. Let's say the stock price went up to £1. Let's be, just for argument's sake, they're going to have to raise 100 million. So that's 100 million shares. Now, on the one hand, they have that 100 million of assets, which they can turn into mine, but also that's going to double, that's going to increase their market cap by 100 million as well. So, yeah. So, how would you summarize that as going about thinking about stock dilution?
Honestly, I just don't think we've got enough information. Really, I think you've we don't even know whether they'll go ahead. You just have to wait and see, and you have to see what the funding environment's like. When you get there is the reality. A lot will depend on how attractive the it looks and what terms they can get money on. But you're not going to be able to raise. How much do they need? 100 million sterling
At
on.
least 100 million, yeah.
Yeah, and you're not going to be able to raise 100 million sterling just in debt when you've got no
I think this is
production
Canadian.
to take some of it. Yeah.
I think this
So
is.
actually, going back to your point of an attractive entry point, in the chat, I posted the life cycle of mineral discovery. You all know this chart, So, and I think that where Cornish Metals is on the red arrow. So in the second chart,
Yeah.
I posted, where basically it's just highly speculative because you don't, you've got to drain the mine. You don't know. You just don't know what sort of shape it's going to be in. Do you remember what got
they're in
Rambler in
the
trouble?
feasibility stage, aren't they? They've actually, because the mine's already dug, they're just doing they're just
Well,
they're kind of here, aren't they?
I
Because
just
they've
I'm not sure they are. I think they're in the discovery stage, Phil, still, because they're draining the mine. If you remember Rambler, they also had to drain the mine, and then because what happened was when the mine went bust, they had to drain it, flooded, and then they had to drain it, and then it just cost them a lot more than they anticipated to get the mine back into a usable state.
right.
Um, and then you have to work out what you've actually got, and then you're going to have to go through and have a mine development plan and raise the money. And I don't think that this is investable until you've got that, you know exactly what you're doing and you've got the money. And
By
so
then
I
it's too
think,
late. By then you're up
yeah,
here.
I know it's not. That's when when you've got the money and the startup is actually in sight. I think that's when you start investing. But because here I think you're in the feasibility at most, because where the share price is drifting down. The chart we've seen earlier of the Cornish metal share price.
Yeah.
You know, I can't see it ramping up until you have more information. And you've got another 18 months where they're just going to be draining water out of it. And the reason the life cycle of a mineral discovery has the shape it has is that over the next 18 months, there's no good news coming out apart from we've drained a lot of water, and people get bored basically and sell, and there's no reason to buy, so the share price just
But
drifts off.
at the end of
And as
next
it
year,
okay,
they could
yeah,
have any time in the second half of next year, really, they could have a announcement,
yeah,
fundraise, so that,
yeah.
we've got money, we're going to build the mine now.
Well,
They
that's
build the
great.
processing plant now.
Yeah. Well, I agree, but then look at it in
But
18 months time. When there's
um,
a positive catalyst, because right now I just can't see a catalyst. It's like the share price is drifting off, people get bored and sell, that creates more negative momentum, and in the meantime they're just pumping out water.
and they're going to have to. I think they're going to do some drill. They've got to convert the resources. I've got this down here. Um, got it here. Yeah, they're currently only inferred and indicated resources, and they've got to
Mm,
convert them into reserves
very good
or
point.
measured resource, maybe,
Yeah,
if not reserves. And so I think they even have to do, once they've drained the mine, I think they have to do some further drills to perhaps to then complete the data package to then get financing. I'm
yeah,
half
I'm
guessing
sure.
there, but I think it's something like that. But to
No,
be
I'm sure
fair
that's
to
right.
them, I do think that their current resource estimates are fairly solid. In that it was a working mine. There's lots of reasonable drill data that was strengthened recently. I don't know. It's not like I think that I'm not sure. I feel like if you can allow me to counter argue your kind of
Sure.
cynicism, I
Yeah,
feel a bit like you're treating them as if it was a kind of you know a whole new discovery, a discovery in Namibia or something,
hmm,
where it's a whole new area with never been exploited before, and whereas this, there is actually quite some substance there to base these estimates on. It's not. I think they need to be
Yeah.
not considered. I think they should be considered as, yeah, there's still a risk it won't end up being resource. You definitely, but I think
Yeah.
it's not. It's halfway between that and your typical inferred and
Yeah.
indicated estimates that you'd get with some, with your more typical.
Yeah.
Because here they've actually got the mine already dug down to the level. They've got lots of
Yeah.
history, lots of data. There are people actually mining there as well that they have data from when it was, and I like to go back to this because the day that it shut up shop, it was, they were accessing some serious resources.
Mhm.
Normally,
Yeah.
you normally have, when you're scraping the barrel, you normally see at the end of a mine life, it should be going down,
Yeah.
not at maximum.
Yeah.
Um, so yeah, but I think a very important thing to perhaps maybe I'll go and spend some time on this, is to think about, if they need to raise 100 million at different share prices, how much is that going to dilute the stock? And then, so how much of a bargain are you going to get when you take account for stock dilution?
Mm.
One thing being, though, is that when they actually raise the money, that money then does become assets in the company. So, but which just kind of compensate for the stock dilution. Um, but I do worry a bit, do you get like into a situation where you need a $1 share price in order
Mm.
to raise the money without too much stock dilution?
Yeah.
But it's a catch 22 because you can't raise that money. You can't get the stock price to go up without getting someone to come in and doing the stock dilution. So it's a bit of a it could be a bit of a catch 22, and that's something to definitely have another think about. Does
Yeah. I mean, where you're probably right, and I'm being very cynical, Rogue, is that just the correlation between what Cornish Metals are trying to do in with the South Crofty mine and what Rambler were trying to do with the Ming mine are just they're very, very similar in that it was an existing mine that still had a lot of resource. It is flooded, and the bottom line is that they raised a lot of money and investors were incredibly enthusiastic, but everyone's just a bit too optimistic about the prospects. And in my humble experience, in the case of Rambler, it was just it cost more. It cost more to refurbish the mine and drain it, and then there was the resource there, but you're mining it in Canada, which was quite expensive, and although the resource was there, they just couldn't mine it economically. And I just worry that in the case of the South Crofty mine, the resource is there, but it's deep. It's in the UK. It's expensive, and the cost of until the cost of um, restoring the mine to operation, and there will be one. I just don't, I just don't think you've got enough information to make an informed decision. And meanwhile, you've seen the share price. There's quite a lot of, expectation already in the share price. To me, so I'd just wait until we get more information. Personally,
and have you done a video on Rambler Metals?
I did. Like, this is back in the day, and it was a total bloody disaster. Because I mean, we looked at it, and
Have
the
you a post-mortem video?
No, I haven't because it's I didn't do we didn't do a post mortem video. It's I did, an original video and then I did updates. And in essence, actually what really annoyed me about Rambler was that despite the fact the whole project was clearly going badly, every pronouncement that came out of them was positive.
Mm.
If you were to read the RNSs, and if you're bored one day, go and read the RNSs. They're just relentlessly positive as the whole project goes downhill.
Well, I'm definitely going to go and check out your video on Rambler Metals and have a look at them, because that could give me a bit of preparedness for this.
Yeah. So, I mean, the reality is, right, that I'm now actually quite a big downer on new oil exploration companies and new mineral exploration companies. Yeah, Dan Leeds quite right. Mark Twain's quip about what's a mine. It's a hole in the ground with a liar on top. You know,
Mm.
basically, just everyone's just too optimistic, and so I'll wait until. Frankly, I like to see what the actual economics are now. In
Yeah,
operation. You
I have
get there.
to. I mean, here's the. I'll show this again.
Yeah, exactly.
You
That's
know,
right. Exactly.
um,
Now, the thing is, if you want to treat this as a speculation and, accept that there are going to be these spikes and you're going to get out on one of the spikes, I think that can work. You know, if you believe there are going to be these, sometimes when
the thing
there's,
is, though, with Cornish Metals, there's only. I think it's either end of the road or they get the final investment decision. Really.
yeah.
Um,
Right. Well, should we open it up to the rest of the Discord and see what they think at this point? Anyone got an opinion? Dan Lead is saying, not a great project for a high rate environment. Yeah, if you believe that's where we are. And well, currently rates are high, and that means if you want to raise money, that's costing you a lot.
mm,
Very capital intensive in lead up to the production. Yeah, you've got to drain the mine for 18 months, and actually, when you're funding through equity and cash, that's not the problem. It's when you have to
but
raise,
normally
100
you'd
million.
have to dig the mine. You'd have to build the decline, so it's a
Yeah,
lot cheaper to just pump uh, than
yeah.
uh, than have to build a whole mine from scratch.
Yeah, but you're going to have to put in all the lifts, etc., etc.
Yeah, that's true.
And to get, this is why the Ming mine, which was Rambler Metals, in part why it was so expensive. It was just, building the ramps, etc., to get down there to get to the ore.
Yeah, tipsters tipped. Yeah, the tipster has tipped MOX, half
What's MO?
cash. MOX, half cash, and operates a similar geological mine. Price to
Right,
earnings of 10 to 1.
Metals X, Australian company, I believe. Is that right?
Yeah.
Hmm.
Um,
So, I mean, anyway, thanks a lot for doing all this, Rogue. Really interesting. I was very impressed actually by how much tin they were producing when they stopped production. There clearly is a lot of tin down there, and ultimately, it all depends on price. I mean, if the tin price goes back to its recent highs and keeps on climbing, then clearly there'd be a very profitable mine there. It really depends on what the break even is.
yeah, and Dan's specified there, actually saying um, it's not just draining it, but then it's getting the level production, because um, they're saying 4,000 tons a year, I believe you said.
Yeah.
So they're actually, I would have thought, just to getting it back up to where it was before would be a challenge.
Yeah.
An expectable, something you'd expect them to do. But but they're saying they're going to double that. So that's kind of a big ask. If they do have to, I was looking at this and thinking, way, yeah, that looks good. But if they're actually going to have to double that in order for
Yeah.
it to go, in order for it to fly, then that is a different story.
Yeah, what I find reassuring about that chart, though, is that, when tin hit $17,000 a ton, they did manage to ramp up production.
Hmm.
So clearly then they thought, well, this is great. We're gonna, make a lot of money out of this mine. And sadly, prices collapsed.
So yeah, I mean, so that was. I hope people found that useful. I thought there were some people in the Discord who were following Cornish metals, because you actually do have a Cornish metals
Yeah.
channel.
No, I'm sure
Um,
there are.
I'm not sure any of those are here, or whether those were the guys maybe who were. They're not here because they were. Maybe those are the guys that were buying in back here, and we don't
Well,
hear from them anymore because they've sold. If any of
well,
you are, if any of the commenters on the Discord, Cornish Metals are here,
yeah.
please do announce yourselves. Um, I'm surprised
Actually,
because
a warning, Rogue. The other thing is, whenever you post anything about stocks which have a big retail following,
mm,
you can get a load of grief, basically. So in the case of Rambler, the moment we kind of said anything skeptical, we just got a load of abuse, frankly. And so I think the general tone of this discussion is deep skepticism. And there will be, the true believers out here holding the shares who will, just probably give us a load of grief, frankly.
yeah, I mean, I was actually feeling. See, I allow myself one speculative play a year with a
Right.
smaller percentage, with 2% of my portfolio, whereas normally I'd invest 8% in a stock. And I hadn't got one for this year yet, so I was really. I've actually done the video already for it, which is a lot more upbeat than this video will be. Uh, but I was fairly upbeat, but I was thinking I want to wait for the tin price to definitely be above 20,000 before going in. But I'm a little bit apprehensive that they need to get that final investment decision really end of next year is the timeline.
Yeah.
And I could see myself rushing in the next 6 months hoping to beat that. But I
Mm.
think the general tone of what people think here is that maybe you can expect some delays. So you might be better off taking that opportunity cost, the risk of opportunity cost, and
Yeah.
waiting for them to be late, and then you get a better price. But I don't know. I need to think about it. I could still see myself rolling the dice, but hopefully I'll sleep on it, and hopefully I'll keep my cool. Maybe we'll see. Um,
Well, good luck,
I'll
Rogue. I
watch
mean,
your
I,
Rambler
I'm,
video. I'll watch your Rambler
yeah.
Metals video,
Well,
and maybe that will
the,
help me.
the thing is, we were really positive on Rambler,
Mm,
and I bought, and um, basically when it went up, when it spiked, I thought, here we go, we're off to the races. But actually, that's when I should have sold. You know that chart, you put up of Cornish metals and all the little spikes.
yes.
You know, those are great selling opportunities. They are not when
Mm,
it goes off to the races. At that point, you get out, and if you want to do it, you start again. Buy it back in later. But the reality was that it was just everyone was just way too optimistic, and the CEO, the CEO just, I don't know whether he was a conscious liar or he was delusional, but basically he thought the mine has much better economics than it actually did have. The reality was that it didn't have any economics. It just wasn't making enough money to cover costs. And so they're continually raising cash, and eventually it was bought by another company and mining company, and shareholders got wiped out. So it's not a great story. You know, we didn't look very clever having said this looks really good, you know, and then basically every time we looked at it, the story got worse, but the CEO remained really optimistic.
Yeah, I've learned, I've done three high risk investments the last few years. They were, well, no, I guess you could say I've done four actually. They were Frontier Developments,
Yeah.
iGas, who is Star Energy now, Rockhopper Exploration. Um, so sorry, no, I've done three. And Star Energy lost all my money. Frontier Developments did very well in, I can't remember now, 3x or something at least, but did very well. Rockhopper did a bit
Mm,
okay, but I've sold now because my original investment thesis was no longer true.
right.
Um, what I've found is I've looked at, I did a tip series where I did lots of stock analysis blitzers on lots of stocks, and people, viewers of my channel, who I kind of assume are mostly more highly educated than your average YouTube channel.
Mhm.
Um, a lot of the stocks I looked at were utter basket cases that people were tipping.
Yeah,
Um,
yeah,
one cellular goods was a good one. Myriad Advertising, another one that springs to mind. Um, there were loads of stocks were utter, you know, and so I'd love to do a bit of, like I say, I try to do one gamble a year because I think it's fun. But the fact is that 95% of them are just not even investable, even after I've
yeah,
looked at them. And then even
yeah,
after
yeah,
even the 5%, you've got to do all that work, and
yeah.
then even the 5%, which I think might have a 50-50 chance, I'm not having that good luck with either. So it is a
Yeah.
bit, it almost makes you think, are you better off just not bothering with the
Well,
high
I mean,
risk plays, or
the thing is, Weg, I really think that there's a cycle for these high risk plays. In
mm,
that, so what I do is I try and buy loads of speculative oil companies
mm,
when the oil price is dirt cheap. Okay. And then when the oil price rises, everyone gets enthusiastic about oil, and they get enthusiastic about all the oil companies
mm,
as well. And the small ones tend to have the best performance. But then when the kind of oil price is doing well, you want to get the hell out. And because I sold all my oil companies last year. And if you look at the share prices of the small ones, even if they've done well, so i3 Energy was, you know, it's done well, but its share price has more than halved over the last year,
yeah,
you know. And actually, I sold it at like best 28, 30p is now at 10p. And actually, it's great, its production has been absolutely fine. There's no reason why its share price should have halved. It's just that then there was a lot of optimism about the oil price and about oil stocks, and that optimism has gone out of the market. Now, when the oil price collapses again and its share price collapses with the oil price, then, it's going to be cheap. And I think the odds are in your favor. So the PE ratio, according to Yahoo, of i3 Energy is currently 3. Okay, and it's on it's on a dividend yield of 10. Yeah.
Wow.
Now, at
10%.
its yep, and I read an investment report last week saying that 10% dividend was very much sustainable, even in the worst case of, they did some analysis of oil going down to $50 a barrel and they could still afford the dividend. And it's just, there's so much sentiment in these small oil companies. You want to buy them when sentiment's awful, and you want to sell them when the sentiment's really good. And so in the case of copper and all the mining companies, again, you want to buy them at the bottom of a recession when everyone's super bearish and the PE ratio is 3. And then when their PE ratio gets to 10, they get the hell out,
Yeah. I think, I like that. There's a shotgun approach.
Yeah.
Focused on sectors.
So, I
At a
mean, and
bottom.
actually, I wanted to pitch this to you as well, though, in that, when, if and when I think we're getting to the bottom of the cycle, I'd like to do some Discord chats where we tell everyone, right, come along and do a pitch. You've got 5 minutes to pitch an oil company or pitch a copper company and just see what everyone comes up with.
That sounds excellent. Yeah. I'd
No.
definitely be up for that if you wanted to do
Yeah,
that
great.
as a
Yeah, we're not there yet.
series. No.
I think we're probably, maybe a year away, but that's my plan, basically.
Yeah, that sounds quite good.
Yeah.
So, right, well, we could either finish here, or we could perhaps spend 20 minutes on general markets. What do you think?
Actually, okay, it's 10 to 10, so we've been going quite a long time now. So earlier I was asking people if they wanted to talk about anything, and basically I didn't get much of a response. So I suspect people would probably just like to go at this point. Is that right? Otherwise, we can stay on. But I mean,
Yeah, if
I think
anyone, we'll leave for that. If anyone wants to, bear in mind, this is the last one of this we're going to do until April, unfortunately.
yeah.
April will be the next one. So
I
anyone
think,
ask? I've got a question from Dan Leeds. What did I make of the Bats write down? So British American Tobacco,
yeah,
they wrote off 25 billion of their assets
yeah,
yesterday, I think it was,
yeah,
and and their share price dropped 8%. Now, when this is Bats numbers here. My thing's still up, isn't it? Yeah.
yeah.
So one thing I'd noticed, I actually sold my Bats yesterday, but
Oh, right.
that was because I had a stop loss for them, and my stop loss got triggered, so I'm out. But good riddance, really. But
Yeah.
when I last looked at them, I noticed that when they took over Reynolds in 2017, their intangible assets increased by 100 million, from 12 million to
Yeah.
117 million. And so as of the last interim, they had 122 million. And when you looked at those assets, they were 80 billion of that, half were intangibles related to their brands. So when they bought Reynolds, they got the Newport cigarette brand and Camel, I think, and some other.
Mm,
And the thing is, this really concerned me because I thought, how could cigarette branding be so valuable
mm,
when no one smokes anymore? Marlboro Man is dead.
mm,
And so I was a bit concerned, and I had actually said in some of my videos that I was concerned that with their current valuation, although they had a price to book of 1 at the time, that was all branding of their cigarettes, which are becoming obsolete very quickly. And sure enough, they did this RNS where they announced that they're they're downgrading that by 25 billion, and they're essentially, I might have this wrong, but my interpretation of the RNS was that the rest is going to be like amortized. The rest will be
Amortized.
amortized over a 30-year period. So they're kind of
Yeah.
saying in 30 years, no one will be smoking anymore. And so this will be shrinking to enough to all this will go away for 30 years. So now they are. That's why the share price dropped. So I kind of picked up on this when I initially looked at them, but at the time I wasn't that confident in my understanding of what an intangible was and stuff. So I kind of raised it as a concern, but didn't act on it. I think my learning experience from this is I now have a good understanding about the intangibles, and so I think next time I come across a stock and they've got like this, a ridiculous increase of intangibles from 12 to 120 billion. I said million, but these are in billion actually. Um,
Mm,
I won't be investing next time, if having learnt my lesson. And
mm.
I've also
Good.
got the this thing here where I yeah, so I've actually updated the market cap, and even I've updated the net assets following the 25 billion downgrade. And then also bear in mind that a lot of that is also just worthless cigarette brands as well. And this market cap is still exceeding that even now. So it's actually, according to this graphic, they're actually more expensive now than they were before the 8% drop in share price.
Mm. Can I come in, Rogue? Actually, to me, the fundamental thing about the BAT's results was that their the number of smokers had declined by 11%. And I think that was in North America. And normally, what they do is they manage to offset the fall in the number of smokers by raising prices. But the fundamental problem was they couldn't do it when you can't. The fall was too large to offset with price rises. And I just think that you're going to face that problem everywhere now. I mean, when I wander around London, I was in the pub last night, and nobody's smoking. You go outside, there used to be loads of people smoking. There's hardly anyone, and I just think that it's now got to the point where actually smoking really is falling out of fashion. You just don't see kids smoking, and you can't offset those that fall in number of smokers with massive price rises. Packet of fags, 15 quid. You know, and if we're going
Yeah.
into recession, that's a lot of money.
So um, they're making a big thing of their vaping and stuff, and non-combustibles being breaking
Mm,
even this year, but it's only breaking even,
yeah.
not profitable yet. And when you look at their revenue from combustibles compared with non-combustibles, basically, I looked at the rates at which they're growing their vaping, and although they do get good results, particularly in Europe, um,
Mm,
in terms of growth, it's still such a small percentage of the pie that actually even if they kept up 30% growth, which probably
mm,
isn't enough, they're never going to replace. It's just like they can't replace this combustibles income. Now, I think in the future, I mean, here's their here's the sector for tobacco, and actually Imperial brands are in better shape than British American tobacco because they've got a lot less of these strange intangibles. Those intangibles were probably a kind of anomaly for BAT, which was something that I should have spotted and not invested in them for actually. But I don't think it's as bad for um, Imperial brands. But if you look at the sector, it's I thought this could be a support, but it's broken below that now. Oh, this is old, but it has now broken below this. And I'd expect the sector to take a long time to equilibrate out. But in the future, when they are when they don't rely on America anymore, they're actually selling. They sell. Their sales are increasing in Asia Pacific, Middle East, and Africa. So when these sales have dropped so bad and their dividends and share price have dropped so bad in the USA and Europe and America, it will get to a certain point where it will bottom out and they'll still have the people that smoke cigarettes because they smoke cannabis or whatever other reason,
Yeah.
or because they are just addicted to smoking. You know, there'll be a residual amount. So it will eventually bottom out the sales in the US and Europe, and then by then they will have a better profile for their vaping as well, and they'll have these other parts of the world where people only smoke more. So there could be a point to invest them in the future, perhaps on the back of their vaping. But
Well,
I think I'd be waiting for this whole sector to bottom out
well, actually,
first.
Lo, can you leave that chart up for a sec? Because that's really interesting. The the US 2023 interims volume growth: cigarettes -12%, snuff -17%. God, they're not even growing their other stuff. Vapes -7%.
Yeah. So in the US, they had this was their interim results, and
Yeah.
they updated that the in the US they'd basically banned menthol, and
Right.
a large number of menthols are very popular in the
Mm,
US. So when they banned menthol, that has hit their volume growth.
yeah.
The vaping is now, we spoke about these elf bars before that everyone
Mm,
smoked. And actually, I've even got here, this is my local
yeah. Yeah.
Sainsbury's.
Bloody hell.
And basically, those are elf bars, you see.
Mm,
These are the top. They're dual. They're Imperial
yeah.
Tobacco's brand, which I think are actually good up there. Um, but yeah, so these are called Lost. Have you ever seen a young person with a Lost Mary
No.
vape?
Yeah, it's pretty wrong. I've seen them littering playgrounds everywhere. It's not a good sign. I think regulation could be on its way.
Well, so this is incredible. So basically, the government you used to be able to get disposables, but where they'd last a week.
Yeah.
But the government has banned those, and they only allow ones that only last for half a day. So that means the government are
That,
weirdly you could
that
get.
makes no sense
I
at
know,
all.
I know. So the government are actually favouring people to smoke these disposables that you just throw
Mm.
away and pollute the planet.
Wow.
The concern I have with the next generation products for these large companies is they actually need greater regulation in order to be successful. And what I mean by that is
Right.
a
Yeah.
lot of these other things are manufactured in China. The barrier to entry is fairly low, and they're not necessarily winning the race on branding. they actually need to win the race on quality. There are some issues with the actual ceramic heating devices and the amount of heavy metals present in some of the cheaper products. And actually, regulation, I think, would help the larger companies because their product is actually, under the surface, a superior product, is my understanding.
Yeah, you're completely right. And actually, the problem they had in America, according to their update, was in the corner shops. People were selling these illegal ones. In America, they're illegal.
Yeah.
And kind of black market ones. So the Views products were missing out. Now you see here in the UK, everyone smokes either the Lost Marys, which are these, or the Elf bars, which are these at the top. And you'll do you notice how there's the stacks? They're so popular that the shelves are empty for the Elf bars and the Lost Marys, but the Views products, these are the British American tobacco products. The shelves are fully stocked. Do you notice that? Because no one's buying them; they're buying the Lost Marys. Um,
Right.
but
Yeah.
the thing is, I actually noticed that they had upped the dosage on these to 800 puffs, whereas these
Mm.
are only 700, if I remember that right, yeah, something like that. I think they're 700. So they're
This
trying to
is
win
why
them
the
more.
next generation products are not profitable at the moment, I think, because it's
Yeah.
the lost leader, isn't it? They're
Well,
trying to win the battle, but
I mean, the fact is, they're not. They actually look better, don't they? Now, I mean, I'd say that
yeah,
the packaging, you can tell that this is a cigarette company producing them because the packaging is definitely better. But yeah, but they're not as popular. Everyone smokes these, and I smoke these as well. Sometimes I normally vape just a refillable, but occasionally I'll try these, and I can say that the Views products do not taste as good as the Lost Marys or the Elf bars. Um,
Mm.
but yeah, I think you're right, Dan, that the government will come in and ban these. Well, they should come in and ban them, but it's funnily enough they haven't though.
Yeah.
yeah.
There's no controversy
The
about it.
larger companies need the better quality control on these. They need
Mm,
greater standards because I've seen some analysis of the cheaper ones, and they're not good. They're not doing what they say on the tin in terms of the actual health
I bet.
aspect. Just on the menthol thing, my understanding is that's been knocked back a year because the Democrats are terrified that banning menthol cigarettes in the States will be problematic for the election year because there's a higher propensity for African American smokers to smoke menthol. So I think that's been knocked back a year.
Oh, that's
Mm.
interesting.
But
Um,
going back to
It is coming though.
so going back to bats, and I'm just be very worried about investing in bats, as you know, Rogue was saying, because they do have a big dividend, but they've also got, was it $46 billion in dollars worth of debt?
Yeah, they're
And
massively in debt.
you know, if their revenues, their profits start dropping, at some stage the dividend just stops, and they start having to repay the debt.
Yeah. I mean, I'll just clarify something. So my this wasn't ever supposed to be a long-term position, really. This is supposed to be buying something that's relatively unloved and defensive on the basis that at some point next year, in a lower rate environment, and if people are panicking,
Yeah.
I think it may re-rate upwards, and then I would hope to get out, to be honest with you, because I'm very uncomfortable with the future of their revenue and the debt they hold.
Mm.
But
Yeah.
in the meantime, you paid 10% to sit on it. So
No, absolutely. 10% is a lot.
yeah, I mean
yeah,
they
we
do
shall
have
see.
they they have a solid net income here over the last 5 years,
Mm. Yeah.
consistently. Despite the raising prices, despite a 4% drop in smokers every year, they have a
Mm.
solid set of results, immaculately solid. they really do what they say on the tin when it comes to being a tobacco company. When you look at how they've sustained their net income and their free cash flow.
The lack of a buyback is upsetting some investors, because I know Imperial have been pursuing quite a large buyback, but I don't think they have anywhere near the same debt problem.
Yeah, I agree. I think if I'd have had Imperial, I know that now actually, when I invested in BATs, there's only BATs or Imperial that you can invest in the UK. And the reason why I disregarded Imperial was at the time they were going through the big Juul scandal in the US. However, they would have definitely been if I'd have just waited for them to bottom out when they had the Juul scandal, that would have been perfect buying time, and you could, and I'm sure there'd be a reasonable long-term dividend payer. But for me, it was a decision I made back in beginning, I think, of perhaps the beginning of last year, and I kind of thought they were nice and defensive. So at the time, I was expecting a recession sooner than we had one, and I thought they were nice and defensive, pay good dividends. They were kind of hated at the time as well in terms of the sector trend. And I'm just sorry, I'm just looking for the sector graph, and I'm looking at the wrong one. Let's get up bats, okay. So yeah, I bought them. Yeah, I bought them here actually, and I was kind of expecting it to go, like back up, and actually, there's two things actually. When I did that video in 2021, I only had 5-year data for sector, and so this is what it looked like. So you see, that looks like quite an attractive when I bought sector graph. However, I have data going for different sectors going all the way back to the beginning of time, and now that is a completely different proposition when I bought, you see. So that was one reason why I wouldn't buy them now, but why I bought them when I did. And the other one was, I think this, when I looked at them, I picked up on this, and at the time, my understanding of reading the books was less than it is now through practice, through reviewing all these stocks. And back then, I just put it in a box of, look, I don't understand this, it doesn't make sense, but I'll just kind of go along with it because I don't understand it. And then once I'd bought, I was kind of stuck. And you'll hear on like the last 3 videos I've done on BATS, I've mentioned this, and I'm kind of ruminating on this, but I'm stuck with them because I've bought already. And I think that's a kind of learning lesson where something like this, I won't get fooled a second time. But also, I kind of picked up on this, even though I wasn't a top expert. What are all these top analysts doing? How come? How come this happened? Without them being
It kind
re-rated.
of puts paid to the efficient market hypothesis, because a lot of people were saying this was expected. I read a load of commentary say this was not unexpected. Well, it obviously was fairly unexpected because the share price tanked 8%.
Exactly.
Yeah, and I mean, there's almost there's kind of it did. Yeah, I mean, maybe this was part of that because Imperial Brands were. But okay, if it was only partially expected. So there were some clever people who knew about it. But obviously, if you looked at their shareholder lists, I bet there's a lot of fund managers and people who didn't expect it, who weren't selling. But another thing is, one thing I've learned above everything else in the last couple of years of looking at these stocks and doing these videos is that actually the sector has a bigger influence than anything with the individual stocks. So if the sector is trending up or down, it kind of doesn't matter if the individual stock, when you look at it, has serious flaws versus its contemporaries, or isn't making money or is making money. I find that the tide of the actual sector, it will drift a lot, is a more powerful force than the actual details that I go in when I compare different stocks. You know, I'll pick I'll look at three oil stocks, for example. One of them is doing easily well better than the others, but the share price is going up just the same, because it's almost like the whole sector is more important. You know, all the kind of dumb money, you know, are all just following the trend, is kind of more of a powerful force than what individuals can pick out by a little individual stock analysis. And so it's something I've definitely learned, and I think that's probably certainly the case for farmer stocks and for internet stocks, IT stocks that I've been looking at this year.
Thank you. That's thoughts are much appreciated.
Great. Okay. Well, look, it's 10:15. I think we thank everyone, particularly Rogue, for all his hard work as usual, and look forward to the next one. Now, Rogue, you're going off for a while, aren't you? So we're not actually going to do another one until, I think, April next year.
Yeah. So I'll take a break. I guess it's kind of hard to, because I really am. I look forward to these every
Great.
month, and it's been really useful. And I think we get insights, and I feel like I gained something from doing these.
Yeah.
That's different to what we normally do on just the YouTube channels. So thanks a lot, everyone, for taking part. So yeah, it's a shame I'll be away for 3 months, but then in a way, maybe it's good to take a break a bit and look forward to the next one in April then. And it's going to be a very interesting next quarter. So anything could have happened by then. So let's just let's just take it easy for a bit. Let the market do what it's going to do, and then we'll come back and do our post-mortem next April.
Right. Well, enjoy your break, Rogue, and thanks for all your hard work, and thanks for everyone for listening. And we will be back in due course. And actually, when I think the commodity cycle is bottoming, I'd like to do a few of these about, and try and get everyone to bring a 5-minute pitch along and get some ideas of what to invest in.
Sounds good.
Great. Okay.
Right,
thanks,
bye,
Rogue.
everyone.
Thanks, everyone. Cheers. Bye.
Thank you.
I do videos like this one just for fun as a hobby. It's for entertainment purposes only. You'd be really stupid to make any kind of investment decision based on this video. Always consult a qualified financial advisor before making any investment decision. Prices can go down as well as up.